The COB is presented by Rabobank. Awarded 2023 SMSF Savings Bank of the Year by Mozo.
Well, hello. This is the COB on this Friday afternoon. I'm Nadine Blaney.
And I'm Juliette Sarli. Made it to the end of the week on what is a pretty positive day for markets.
It's incredible, really. I mean, we've got not just a bit of green on screen, like really, after 10, everything went up.
Yeah.
And it pretty much stayed there all throughout the day.
Indeed, and we're staying near those highs on the close, 1.3% on the CBO 200. I mean, it was a positive session coming through from the likes of Europe and the US. The ECB hiking rates there, good retail sales figures from the US too. And you've got to continue to look at that ratchet higher, not only in oil, but in iron ore, which is providing a very good boon for a lot of our miners.
Yeah, it's incredible, right? We've got the data dump from China to digest today as well, and already, Juliette, I'm seeing headlines about soft landing being negotiated in China, which was not the narrative that we were talking about just a little while ago. We were talking about this sluggish reopening and it's not coming to fruition and the stimulus wasn't enough, but the data is to be believed, perhaps things are improving.
And particularly when you look at the retail sales, I mean, you've got to imagine, like everywhere, there's built up savings left over from those COVID years, but that 4.5% growth in retail from a year ago for August, certainly better than what we'd seen in July and better than what the forecast was for just under 4%, excuse me.
Yeah, so we watched that China data. It's one of our key themes today, really helping to lift the market. We've seen the Aussie dollar as well be a beneficiary. I think it's
64.6, something like that.
It's up and headed for its biggest weekly gain in 2 months. That's the stat I was looking for. And oil, to your point, Juliette, I mean, oil is just continuing to rise. Now, yeah, there are some beneficiaries of that, being the energy companies. But then you start to think about inflation and you start to think what it does when you see those petrol prices rising. I know one of our viewers tweeted to me, why did petrol go up 30 cents overnight at the Bowser? And to be honest, even with the oil price where it is, I don't know why that happens.
Well, I'm driving for the first time in almost a decade after coming back from Asia where you don't drive. And I had to fill up my car too. And it was like, oh, I'm not sure I really like these numbers that I'm seeing.
Not at all. All right. So there's some of the talking points, but sectors of the day today, it really was the miners that won the day. In fact, all 11 sectors were positive today. You don't see that very often.
An A+ for the market. Yeah, Fortescue 21.28. Look at that 4% jump, and there's still this prediction that iron ore could ratchet even higher. Energy, we've been talking about, obviously a positive day for that sector too. You've got Santos there up by some 2%.
Now, yesterday, I mean, it was a world of pain for a lot of these tech names here in Australia, but today, looking pretty good. It's so interesting to see. Yesterday, Block was the company that was pushing higher. Today, not so much, but that's a pretty hefty jump for WiseTech there, up by 2%. Xero as well, up by 2%. Some of the corporate stories, look, again, it wasn't a blockbuster day for corporate news, but
Qantas was an interesting one.
What happened with Qantas? I missed that.
Oh, so the ACCC with the Qantas China Eastern saying, look, they've got to basically not collaborate or collude on those, I should get my correct words here so that I'm not giving wrong information, but it's basically about that movement in terms of some of their passengers flying on China Eastern and Qantas. So we saw a little bit of a reaction coming through there.
I think they're calling it, they're rejecting that joint business agreement with China Eastern. So I forgot about that. Otherwise, we had, well, let's get some of these share prices up on screen. We had Ramsay Health saying that it had got an offer for one of its businesses, and it also had a ratings change by one of the ratings agencies. I was just trying to see, I think it was Fitch. But regardless, we've got Ramsay Healthcare, that Fitch downgraded, and it's received offers for that healthcare joint venture. Novonix, I spoke with the CEO just yesterday or the day before, up by 36%. It has made some progress when it comes to its battery technology, and today it's saying that it has increased its production target at the Tennessee facility. Viva
Yeah, Viva Energy looking up by 1.7%. We have been looking quite a lot at some of these big movers today. And I think what was also interesting today was the rebalancing of the ASX 200. But in terms of Viva Energy, Vitol confirming that 16% sale. And so those calms rattled the market a little bit. And this after the Dutch oil trading giant did sell that 16%. But did you notice the change of the ASX 200? Apparently there was 201 stocks and now there's 200. So 6 out, 5 in today with that rebalancing.
Yeah, I was actually speaking with a company on the small caps, Weebit Nano. It's a semiconductor company, and it is moving into the 200 next week. So there's a few moves that are happening, and I think it takes effect on the 18th. Yancoal, I was watching this one today. Its share price gained on coal sale deal renewal, so renewal of those deals. And Metcash, interesting to see nothing much happen with the share price, but it did hold its AGM, put out a trading update, said that the first 7 weeks of FY24 sales were going all right. Yeah, but clearly not a lot of volume going through there on the CIBO Australia Index.
No, and we had Metcash at the end there, and of course that was the stock of the day.
They're optimistic, their outlook going forward. So it is a defensive sector. So, I would definitely not say it's a sell. I would even say it's a buy down here.
Okay.
I think, it's steady as she goes. And if you've got it, hold. But definitely I would not be adverse to buying it down here. And on the chart, because I'm a technician as well, it's looking like it's starting to move back up here. And if you bought it here, you'd have a stop, below, just below around 360, you'd have a stop in place. So that's not much downside really. But I think, it could move back up to about $4 and beyond, even maybe as high as $4.20. So down here, look, it's good value. It's on a low multiple, about 10 times, which is cheaper than Coles or Woolies.
Yep.
So, but again, it's steady as she goes.
I am a little bit concerned that they do tend to be a little bit more expensive than Coles and Woolies, which are the competitors. So I see them as a little bit less resilient, perhaps, than David does. And as a result of that, my opinion of this stock is just a little bit worse than his. So where he says hold, maybe a buy, I would say, look, if you're holding this as a dividend stock, I'd hold on to it and keep getting that dividend. But it's not one I would be buying. Look, I don't necessarily think there's going to be a recession, but I do think that there might be some behaviors which mean that people are substituting what they might buy at the IGA for something they'll buy at Coles, Woolies or Aldi instead. So for that reason, I hold it best. I wouldn't be getting into it.
So that was the stock of the day. You can watch the call either online, it's up there already, or if you like podcasts, you can listen to it in podcast form, maybe while you're on your weekend walk. It's going to be a hot one.
Oh,
in
yes.
Sydney.
Yeah, I know. Tessa and I were talking about, is it beach weather this weekend?
I think the beaches will be really busy in Sydney this weekend.
Yeah.
As long as the smoke doesn't get too bad. Anyhow, we digress. Let's welcome to the conversation Jason Tay, who's joining us from Vertium Asset Management. Jason, hi, welcome.
Thank you for having me.
So it looks like over the 5 trading days, we're going to end up just shy of 2%. That's not too bad because it was a bit touch and go there this week.
That's right. This week, a month today, it was down, and then we're slightly in the positive territory. So so that's all good so far.
When you think about the China soft landing scenario, I know ANZ just put out a note, intonating that it could be a possible now. Is that really bullish for the Aussie market toward the end of the year, you think?
Well, anything related to China is bullish for the Aussie market, right? Because 30% of the Aussie market is related to resources. So, with such a heavy weighting, the direction of China would dictate 30% of our market.
So let's talk a little bit more about what we saw from that China picture. We were talking about the retail sales potentially showing some signs of the consumer, but the property space is still such a worry. What does that mean for the outlook for our biggest trading partner?
Yeah, so it's interesting because a couple of weeks ago, China actually came up with proper property stimulus programs in terms of having lower down payments for your second house. Previously, prior to those announcements, it was like you have to put down 80% cash, right? Like who puts down 80% cash for their second property? So they lowered it to 30%. So that first weekend, the amount of property transactions that went through in China far outweighed the previous month. So there was activity coming through. And eventually you should see lending activity coming through, obviously, because now you can borrow against your second house. I think over time, for the next few months, you should see an improvement in the Chinese data, especially the loan data. And obviously last night with the drop in the reserve requirement for banks, that would help banks lend more as well.
Do we see more of that? I mean, that RRR move?
I think the last RRR move was in March. I think obviously this is the second one since then. So obviously China is trying to stimulate, or maybe not even stimulate, but maybe just stop the decline. So I think they're trying to put a floor in that decline in activity, and if it puts a floor there, it obviously puts a floor in the iron ore price.
Yeah.
and property related transactions as well.
Okay, yeah, I spoke with a guest earlier today, Heath Moss from HLM Investments, who was saying he reckons resources to the end of the year are going to go very strong. What else has been going? Well, insurance stocks have been traveling along pretty well.
Yeah.
So is there still some upside left there?
Yeah, yes. So there's a couple of themes that's happening. Currently, look, if you think about the inflation data, that could possibly pick up again. Oil prices are running, which would impact inflation and could impact higher bond yields, and insurance stocks sort of come into that play as well.
Okay.
Right. So obviously the insurance cycle, in terms of rising premiums, it raises their earnings, but also rising bond yields raises insurance profits as well. So, but in that space, we actually like two particular stocks, QBE and Medibank Private. Right. So I think those two stocks have further room to rally in that space.
Why is that in particular?
Yeah. So obviously, when you look at the earnings drivers for all the insurance stocks, yes, they will go up based on insurance premiums and rising bond yields, but those two in particular have actually not gone up enough, right? The return on equity for both QBE and Medibank Private is actually improved quite a lot since 2019, right? So the whole sector has moved up.
Yeah. Okay. So let's look at the next chart that you did bring, because I think this illustrates the point quite well. Walk us through this.
Yeah, so what that chart sort of illustrates is the 2019 price to book multiple against their return on equity. And lo and behold, yes, it's improved across the board, but both like the Suncorp, IAG and NIB, they're still roughly just trading around fair value. But since that time, 4 years later, since 2019, QBE's ROE has gone from 10% to 15%. Right, so 50% uplift, and Medibank has also improved its ROE over that time frame. But the market, for whatever reason, is still pricing on 2019 multiples.
What happens though if we start to see a bushfire season that is predicted? You've got the likes of QBE also saying to artists, look, we're going to raise your premiums if you're climbing a wall to hang a mural, for example.
Yeah.
So they're really clamping down potentially on some of these premium payouts. What does that mean? I mean, I guess it's positive for their margins, but what does it mean more broadly?
Yeah, so broadly, again, look, they'll just tighten up the insurance market again, right? So, look, if there is a major, it's a big if obviously, right?
Yeah.
If there is another major bushfire season, that'll impact most insurers from a claims experience. The key is for these insurance companies what they have reinsured back into the insurance market so that they don't get hit with these big claims, and typically they have very good programs. So that's why their margins don't typically collapse. That's why the floods the last couple of years, you didn't see IAG's or Suncorp's margins collapse, right? Because there is very strong reinsurance programs. But any major catastrophe now, or like floods or whatever it is, you just see the insurance market tighten up further. So higher premiums, and if these insurance companies have strong reinsurance programs, it doesn't really hurt them so much. And it's really how they sort of risk manage, these events.
What about costs for the insurers? How have they been able, have they had big cost out programs?
Yeah, so, under the hood, somehow, QBE and Medibank Private has had very good cost control. So since 2019, the expense ratios have fallen a lot, right? So this chart sort of illustrates to you QBE and Medibank. has dramatically reduced their costs over the last 4 years, and QBE obviously huge beneficiaries of that. And actually, we believe that this is actually the main driver for the earnings improvement, for the improvement in the ROE over the last 4 years. And this is kind of like perplexing why, when we look at the mispricing of QBE and Medibank, because typically when companies are run more efficiently, they stay efficient, right? It's not temporary. So that ROE that we're seeing today for QBE and Medibank is actually pretty sticky, and we can't figure out why the market's ignoring that. But be that as it may, it's an opportunity.
Yeah, mispricing in the market is what you're looking for.
And then over time, I think the market will fully recognise how these businesses are run better and then re-rate these stocks.
So QBE and Medibank Private are your picks in the insurance space because they've got more upside left in them. But when does the bubble burst? Like, is that when we see rate cuts coming through?
So think about the drivers of insurance companies. It's the insurance cycle, obviously, right? So if there are major events, that could tighten up even further. And possibly at some point, when rates fall, we're not seeing it yet, right? That could have an impact on insurance companies. But with these two stocks, QBE and Medibank, because they're priced so low, I think they can handle it, right? The other stocks, I'm not sure.
Yeah, okay. So we just want to looking at some of the other picks that you might have on the broader market. I mean, we're heading in, we've got just over
FOMC next week?
Yes, FOMC. We've got the RBA potentially moving after that October inflation, September inflation data out in October. What do we see by the end of the year when we're trying to hold on to that 7,300 point on the ASX 200?
Yeah, we're long energy.
Okay.
Right. So, yes, iron ore for the moment, for the day, looks really interesting. But energy, the supply tightness is very, very real. Right. So. Iron ore is obviously related to China because China is consumes 2/3 of the seaborne iron ore market, but energy is more related to the US market, right? So 20% of global oil demand comes from the US, 16% from China, so it's still a US play, right? There are early signs that the manufacturing sector could be bottoming in the United States. So we can see freight picking up, right? And obviously if you're moving more freight, you're using more diesel, right? So hence diesel demand is actually beginning to pick up at a time when supply is actually very tight for oil. So, which is why we're seeing for the last couple of months, the oil price have moved quite a lot, based on not much information, right? But that's because all you need is a small change in demand with a tight oil market, and then oil price is moving.
Yeah, and the Saudis and the Russians want to keep it tight.
And they want to keep it tight as well.
And if we bring it back full circle, we get China in the mix as well.
Yeah, China in the mix, and on top of that, the Strategic Petroleum Reserve, guess what? Over the last month, they're beginning to buy again.
Right.
Their levels are so low. It's off the chart, decades low, that they have to refill, and they're refilling when there's a chance that the economy could be picking up again.
Well, Jason, you gave us everything. You gave us analysis, you gave us a couple of stock picks, and you told us your long energy. So we've learned a lot on this Friday from you. We hope you have a good weekend. Thanks for joining us.
All right, let's get to the leaders and laggards of the day's session on what has been a positive session for the overall market. Sierra Resources, that's been going on such a strong high, up by 11% there on the close. Life 360 is really interesting. This is, of course, the imaging, family tracking app, location sharing, family safety. I was talking earlier to Peter Capetz from Equity Story. This was one of his picks as well, that he sort of liked a bit more momentum coming through up in that one. So yeah, we can see that on the trade.
And this is just really indicative of what we've seen going on this week in general. Moves without news on the day. Like, I know that we did have news from Imugene earlier in the week, some positive test results coming through. Chalice Mining has been so volatile as of late, but all of these top movers, I'd say probably to number 15 on the list, really moving on no news. So sort of indicative of the phase of the cycle that we're in, and also the year. We're post-reporting season, we're pre-AGM, so just waiting to get some more meaningful news from these companies. Sarai Resources actually is one of those companies that's being taken out of the 200 next week. Laggards, what do we have here? Juliet, let's
Auckland
see.
I mean, but look, you look at the laggards, they're not really that big moves, are they? 1.5% from Auckland International. Again, no massive news. And what was also interesting was that it wasn't really any of the ex-div stocks, although there were only 2 today, that really were the laggards. BlueScope down by some 1.2%. And, you know, Block, you mentioned that earlier.
Yeah.
That was interesting given that you've seen elsewhere such a rally coming through in tech players today on the back of what we saw on Wall Street. I think the overall tech space, if we kind of have a proper tech space, but that index was holding at something like a 3-week high, 0, and NextDC looking really solid today, but Block getting a bit of a laggard, or getting a bit of a sell-off, I should say.
Yeah, Cleanaway, it's got a new chair. I don't know if that's what moved the dial, but down by 1.2%. In the small to mid-cap space, I had a little look at these through the small caps. Novonix, as we said, up by 36% on that production target being upped at its Tennessee plant. And Zip, again, I didn't see any news associated, but up by 13%. Flipping the page. Oh, you know what? Also, strong retail sales in the U.S. might have impacted Zip. Here's just sort of a motley crew of these big movers in the small to mid cap space. I wanted to know
what happened to Oz Aurum, because I was just talking to the CEO and there was that 250% jump on the open. It must have petered off quite a bit in the latter part of the day.
Sometimes that doesn't pull all the data from the really small end of the market. That was an interesting story. It's made of lithium.
It's got a lithium purchase. So he said rather that they weren't doing as well with gold. So now they're going to be a dual commodity company with gold production in WA and lithium in Brazil.
Yeah, put lithium in your release and
and up it goes.
Yeah, up it goes. All right, tonight we've got quite a lot of data to hang our hats on. The University of Michigan consumer sentiment is a big one, so we'll be watching out for that. The consumer, the real driver of the American economy. And I just thought we should look at next week, Julia.
Yeah, RBA meeting minutes, always a key indication. Are we going to see anything new in the language there? Is it going to be a carbon copy of the prior? And, you know, as we were mentioning, what moves the needle next for the RBA? Probably not the jobs numbers that we had this week, but definitely the next inflation print will be something that Michelle Bullock and co will be looking at.
Oh, yeah. Got to get used to saying Michelle Bullock.
Yeah. Well, I said Vanessa Hudson because I got so excited by the fact that there were 2 female people at the helm. I just decided to mix them up. But the Fed, of course, in focus too.
Oh, yeah, the Fed's going to be a big one. There's not the expectation that we will see a hike coming through. But Fed speakers, including Jerome Powell themselves, have said that you can't rule out further interest rate hikes coming through in the United States. We've got the Bank of England. England is just such a difficult one. Inflation high, wages high, but, trouble in the economy. And then, to our chat with Jason Tay from Vertium, China loan prime rates out next week as well. So it's going to be a busy one.
Indeed, it always is in markets.
It is. So today we've got a good news story for you. So as we have seen now, the last of the day's trades go through the ASX. Look, a little bit of selling toward the close, but I think we should be relatively impressed with the performance of the market today. Week to date, up by 1.7%.
On a positive session across the APAC region as well, and that was thanks to that better than expected Chinese economic data.
Well, that was a good week. Thanks so much for joining us. If you've missed anything, you can always catch up on the weekend. I hope you have a good weekend. I hope you have a good weekend.
I hope you do too.
See you Monday.
Next week.
The COB is presented by Rabobank. Awarded 2023 SMSF Savings Bank of the Year by Mozo.